See page number 17.25, problem number 20. Lot of problems are given. You can practice most of them on your own along with solutions. I will do only selected problems because examination you are not going to get a pure admission problem. Page number 17.25, problem number 20. If I am not doing a problem from the material, that means it is very simple. You can definitely solve it on your own, and solutions are also provided. Okay, I expect you to start solving them on your own. Question which I don't do, you have to do on your own. Gopal and Govind are partners sharing profits and losses in the ratio of 60:40. So who are our partners now? Gopal and Govind. The firm's balance sheet as on 31st March 2008 are as follows. Fixed assets 3 lakh, investments 50,000, current assets 2 lakh, loans and advances 1 lakh. Capital accounts, Gopal 1,20,000, Govind 80,000, long term loan 2 lakh and current liabilities 2,50,000, totally 6,50,000. Due to financial difficulties, they have decided to admit Guru as a partner from 1st April 2008 on the following terms. So they have decided to admit one more partner, again another G, Guru, 3G, Gopal, Govind and Guru. Now don't sing songs. Due to financial difficulties, they have decided to admit Guru as a partner from 1st April 2008 on the following terms. Guru will be paid 40% of the profits. So Guru is getting lion's share, 40% of the profits. Guru will bring cash 1 lakh as capital. It is agreed that goodwill of the firm will be valued at 2 years purchase of 3 years normal average profits of the firm. Normal average profit. Underline that word, normal. Guru will bring in cash his share of goodwill. It was also decided that partners will not withdraw their share of goodwill, nor will the goodwill account appear in the books of accounts. Goodwill account should not appear in the books of accounts. But Guru is going to bring cash for his share of goodwill. Please tell me which method will you apply? Premium method. The profits of the previous 3 years were as follows. For the year ended 31st March 2006, profit 20,000 includes insurance claim received 40,000. Insurance claim on a fire accident is not a normal item, it is an abnormal item. If this abnormal item was not there, you would not have got a profit of 20,000, you would have got a loss of 20,000. Did you understand? Total profit is 20,000 after including abnormal gain of 40,000. If the abnormal gain was not there, what would have been the profit? Minus 20,000. For the year ended 31st March 2007, loss of 80,000 includes voluntary retirement compensation paid 1,10,000. During the year, we have paid some VRS, voluntary retirement compensation to our employees. Again, it is not an ordinary item. It's not going to recur every year. Extraordinary item. If this item was not there, what would have been the profits of the company? There is a loss of 80,000. If that VRS payment was not there, loss 80,000, add back 1,10,000. Minus 80 plus 110, the answer goes into 30,000 positive profit. For the year ended 31st March 2008, profit is rupees 1,05,000. It includes a profit of 25,000 on sale of an asset. Again, sale of an asset is not a normal item. Is it your business to sell assets every day? So you have to subtract that also. It was decided to revalue the assets on 31st March 2008 as follows. Fixed assets net 4 lakh. See the balance sheet value. What is the balance sheet value for fixed asset? 3 lakh. Revalued amount is 4 lakh. Increase in value of fixed asset. Profit. Fixed asset account debtor to revaluation account. Current assets how much? 1,80,000. Book value is 2 lakh. Revalued amount is 1,80,000, 20,000 downwards. Loans and advances 1 lakh. Balance sheet value is also 1 lakh.
No.
Revalued amount is also 1 lakh, hence there is no revaluation profit or loss. The new profit sharing ratio after admission of Guru was 35, 25 and 40. The new ratio is how much? 35, 25 and 40. Can you tell me quickly, in place of in Gopal and Govind, who has sacrificed and who has gained? Gopal was getting 60 by 100. Now he is going to get 35 by 100. So he has sacrificed 25 parts. Govind, he was getting earlier 40 by 100. Now he is going to get 25 by 100. He has sacrificed 15 parts. Sacrificing ratio between Gopal and Govind is 25 by 100 and 15 by 100. 25 is to 15, 5 is to 3. Past journal entries on admission, show goodwill calculation, prepare revaluation account, partners capital account and balance sheet as on 1st April 2008 after admission of Guru. Okay, start opening all the account one by one. First step, revaluation. Open revaluation account. Open revaluation account. This bigger account is not necessary, I think. It was decided not to open goodwill account, no. Hence I am not going to open goodwill account. Are there any reserves in the balance sheet? There are no reserves. Actually, flow of accounts is like this. You have to open a small goodwill account also. Small goodwill account. Then we'll open one more account, reserves. If there are any reserves in the balance sheet, those accounts have to be opened. Then we open cash and bank account. Now you are IPCC students, so only one capital account for all the partners. Gopal, Govind, Guru. Partners capital account, debit and credit. Then balance sheet after admission. Please be quick. Let us start with revaluation of assets and liabilities. See that second last paragraph given in the problem. It was decided to revalue the assets on 31st March 2008 as follows. Fixed assets net 4 lakh. Balance sheet value is 3 lakh. But we now want to revalue it to 4 lakh. There is an increase of 1 lakh. What is the entry we are going to pass when the fixed assets are going to increase? Fixed assets account at R2 revaluation account by fixed assets 1 lakh. I'll immediately write the revalued amount in this balance sheet. By fixed asset, you pass an entry, fixed asset account at R2 revaluation account. Revaluation account is credited with the profit. Fixed account is already showing 3 lakh debit balance. If you again debit, balance will increase. Fixed asset is showing the balance sheet at 4 lakhs. Next, investments 50,000. If you see the revalued amount, we are saying investments value nil. That means book value is 50,000. We are saying investments are not worth anything. That means entire amount is a loss. What is entry right? Revaluation account at R2 investment account. Revaluation account at R2 investment account 50,000. Investment account showed a debit balance of 50,000. Now we have passed an entry revaluation account to investment account. Investment account is credited. Automatically the account will get closed. So here will show investment NIL nil. or we can completely omit it also. Next. Current assets. Balance sheet value is 2 lakh. Now we want to revalue it to 1,80,000. It has to be revalued downwards. Revaluation account at R2 current assets 20,000. How much? 1 lakh? 2 lakh minus 20,000. 1,80,000. Revalued downwards. Loans and advances book value is 1 lakh. Revalued amount is also 1 lakh. Hence there is no revaluation profit or loss. You can comment the revaluation. Now come to goodwill. What is said about goodwill? See that paragraph. Guru will be paid 40% of the profits. Guru will bring in cash 1 lakh as capital. It is agreed that goodwill of the firm will be valued at 2 years purchase of 3 years normal average profits of the firm. And Guru will bring in cash for his share of goodwill. It is also decided that partners will not withdraw their share of goodwill, nor will the goodwill appear in the books of accounts. So we cannot use the goodwill account. Is it clear? You have to give treatment directly to the capital accounts. And Guru is going to bring cash for his share of goodwill. Working notes, valuation of goodwill. Okay, before I do that, I think I forgot to write loans and advances. Loans and advances, 1 lakh. Valuation of goodwill. For that, I have to first of all calculate normal profits. Calculation of normal profits. Last 3 years, tell me the years. Particulars 2006, 2007 and 2008. Profits. What are the profits given to us for 2006, 7 and 8? 20,000, 80,000 loss and 1,05,000 profit. Alright. Add back abnormal losses less abnormal gains. So if there are any abnormal losses, add them back. If there are any abnormal gains, remove them. In 2006, what did we have? In 2006, we have received an insurance claim of how much? 40,000, which we assume it as an abnormal gain. We are going to subtract it. 40,000 abnormal gain, then subtracted. So net amount is how much? 20,000 loss. In 2007, what did we have? We have paid abnormal. We have paid voluntary retirement compensation of 1,10,000, which has to be now added back. Abnormal loss, we have to now add back. Because the expense is not expected to recur in the future. 1,10,000, add here. 30,000 profit. 30,000 profit. In 2006, 2008, what did we have? Sale of an asset, abnormal profit, which are not expected to recur in the future. Less, how much? 25,000. So how much is it? 80,000. So we have now normal profits. Normal profits we now have. We now have normal profits. Now calculate goodwill is equal to 2 years purchase of 3 years average profits. Goodwill is equal to 2 years purchase of 3 years average profits. Goodwill is equal to 2 years purchase of 3 years average profits. So goodwill is equal to, add those profits, 80 plus 30 minus 20, 90,000. We'll use simple average. You need not use weighted average in this problem. Or you can assume also that and you can put weights and also solve it. It's not a problem. No. The question is whether we should use weighted average or simple average profits. Normal average means normal profits taken at an average. Okay, write down. Simple average of profits is how much? Simple average of profits, just add these 3 profits and divide it by 3, 30,000. Into 2, goodwill is equal to 2 years purchase of average profits. It is 110 minus 20, 90,000 divided by 3, 30,000 into 2 is 60,000. So goodwill value is 60,000. Now Guru is going to bring cash for his share of goodwill. Write down. Guru's share. Guru's share. %40 of 60,000. 40% of 60,000. 24,000. Write down. Sacrificing ratio of Gopal and Govind. Please quickly write down. Sacrificing ratio of Gopal and Govind. Gopal, old ratio 60 by 100 minus new ratio 35 by 100. Gopal, old ratio 60 by 100, new ratio 35 by 100. It is 25 by 100. Govind, old ratio 40 by 100, new ratio 25 by 100. 40 by 100 minus 25 by 100, how much is it? 15 by 100. So sacrificing ratio is 25 by 100 is to 15 by 100. Sacrificing ratio is 25 by 100 is to 15 by 100. 100 cancel, 25 by 25 is to 15, 5 is to 3. Correct? 25 is to 15, 5 is to 3. Clear? Now write down an entry. Cash account debtor 24,000. Cash account debtor 24,000. Cash account debtor 24,000. To Gopal account, Govind account. Share the above amount in the ratio of 5:3. Share the above amount in the ratio of 5:3. 15,000 and 9,000. Now give posting. I think we did. Can you just tell me the opening balance of cash and bank? Nothing is there. Brought down 0. Wait. Tell me, partners capital account balance is brought down. Govind, Guru, nil. Now give an entry. Give the posting to Gopal account 15,000. To Govind account 9,000. By cash 15,000 and 9,000. Did you complete it, everyone? Let us read the remaining part of the question. Guru will also bring cash 1 lakh as capital. What is entry when Guru brings 1 lakh as cash for his capital? Cash account returned to Guru's capital account. That's it. There are no other adjustments left in the problem. Let us close revaluation account. Tell me, how much profit do you have?
30,000.
1 lakh minus 70 to Gopal account, to Govind account. Shared only to Gopal and Govind. Revaluation profits belong only to the old partners. They do not belong to the new partner.
18,000.
In their old profit sharing ratio, 60-40. By revaluation account, 18,000, 12,000, nil. We did not use goodwill account. We did not use reserves account. Now balance the cash account. Did the existing partner withdraw their share of goodwill? No, the problem clearly said the partners are not withdrawing the money from the firm. They are keeping it there itself. Balance cash account, tell me how much is left. Balance sheet, cash, 1,24,000. What?
Current account included.
No, but this is some extra cash which has come, no? This all is extra cash which has come after balance sheet. Partners capital account, tell me the balance is carried down. 1,53,000. 1,01,000. 1 lakh. Show them in the balance sheet. Gopal capital 1,53,000. Govind capital 1,01,000. Guru capital 1 lakh. See the balance sheet, there are some liabilities which we have not considered till now. Long term loan, how much is it? 2 lakh. Current liabilities. Now balance sheet should tally. 8 lakh 4,000.